Hello, everyone, and welcome to this webinar. My name is Shet Makila, and I'm the moderator for today's webinar, Machine Learning in TCA Transaction Cost Analysis, the Acceleration to Automation, and thank you for joining. Before I introduce the speakers, there are a few housekeeping points I would like to cover. So at the bottom of the webinar screen, you should see a toolbar. Use the toolbar to access a range of applications, such as speaker bios, webinar materials, and technical support. If you click on those applications, it should open up on your screen. All applications are resizable and movable, so feel free to move them around to get the most out of your screen space. Should you have any questions, please submit them through the webinar via the Q&A box that you see. We will come back to answer all of these towards the end of the webinar. Of course, we also value your feedback, so please do complete the pop-up survey at the end of the webinar. This would help us optimize your future experience with us. In today's session, we will and are going to discuss the implications of increased client contact volumes and trade executions. Also, how to implement parameter optimization to improve execution performance, and how to implement a multi-asset TCA program to get pre- and post-trade insights. I here also welcome our speakers for today's webinar. Carl Carey is the head of trading analytics for LSE, the London Stock Exchange Group Data and Analytics business, and has prior roles running electronic and automated market making businesses and technology divisions for large sell-side banks. We have Michael Roulier, is CTO at QUOD Financial and leads the design and the development team in the ongoing growth of QUOD's Adaptive Execution Platform, AEP. And before joining QUOD, Michael was head of product development at Capital Markets, technology consultant, NETS. Elliot Banks, our third speaker here in this round today, is the chief product officer at BMLL and is responsible for data science, product development, and product delivery. He's working very closely with both clients and also development teams to deliver BML's analytics and product suite to clients. Let's begin the session and kick off with our first question. Welcome, everyone. Can the speakers hear me? I will start with my first question now. Maybe directly towards Elliot. What are the implications of significant increases in client contact volumes and trade executions during these times?
Thanks, Shahad, and good afternoon, everyone. So as Shahad said, I'm Chief Product at BMLL. For those who don't know BMLL, we take historical order book data at the most granular form you can get and turn it and build analytics on top of that. And I'm just going to quickly show a couple of slides, or one slide, to sort of look at that impact and answer that question about the change that we've had with COVID and the last sort of year to 18 months, what that's implied. So here we've got aggregated just on one venue across the LSE. We've looked at a couple of specific statistics. First of all, we've got the traded volume on the lit order book and the spread of sort of the top two values that we can see. And it's probably not surprising that we've seen this huge jump in volumes sort of February, March, April time last year, as well as a massive increase and widening of spreads. And that's probably not surprising to anyone here. I think what we noticed, and one of the things that we've certainly seen when talking to our clients, is actually there's a lot more beyond that. So the bottom chart there is the average resting times of orders. So to do that, we've actually taken every single order from the order books on the London Stock Exchange and said, okay, how long are they actually sitting on the order book for? And you see a real decrease. And this is aggregated across the whole market, hence the sort of timescales. But you see this whether you look at the FTSE 100, the 250. There's a real decrease in the length of time these orders are spending on the order book, and that's signaling a change in trading state. So these types of implications actually mean by looking beyond the top of the order book, there's this whole structure that's changed and that's happened over the past year. And looking at this historical data is going to be critical to any TCA you do, any real-time analysis, any actual trading that's going on. And one other thing I'll just point out is you can see on the top bar, there are these increase in volumes on the right-hand side there due to things like good news events, such as vaccines coming through or change in political state, such as when Biden succeeded Trump in office. But what we noticed and what you can see on the bottom chart is the resting times haven't been affected. So while volumes and spreads might give you some information, actually by looking at the full depth of the order book, you can see a lot more of this. And that's absolutely critical for this TCA, for building out any machine learning, any automation, and actually using that to execute trades.
I believe a couple of feedback is coming from the audience that they can't see the slide. Maybe we can have a couple of details here and for anyone who cannot see it. Maybe we can add a couple of information regarding that.
Sure, no, absolutely fine, and I think we can certainly provide the slide afterwards. The key things are you see from some sort of volumes going across the LSE, lit volumes from sort of 5 billion to 15+ billion of GBP traded on the LSE between sort of January and March. But then you see a drop off again, which is unsurprising. Similarly, a spread naturally widens. I think average spread goes from sort of certainly less than 100 basis points up to, in that March period, sort of 200-300. Now, this is aggregated across the whole of the LSE, so you've got less liquid stocks, which are going to add more to that. But the key point is this big spike that comes to COVID and a long tail off. Now, what you can see on the volumes and the spreads is you see some little bumps that occur through some of those good news events. And the key thing is by looking at a plot of resting times, and we'll get this information out to everyone afterwards, you can see you can see that these times do not change when these other events are happening. And what that's telling us is it's a different state of the market. The market was quite panicked at the start of the year, start of last year. There's a lot of aggressions. There's a lot of a different trading phase to what happened later in the year when there was still big movements, there were still big price changes, but it was a much more orderly state.
Thanks for clarifying a couple more details on that. I believe our speakers are free to add anything if they like. Otherwise, we can also move to our first poll that we're going to show you. I hope everyone can see this coming up. And you can select one of the following answers regarding the first poll and the question, what is your biggest challenge in using TCA? Now we have the possible answers. Feel free to select one of them now. So what is your biggest challenge in using TCA? Data management, identifying relevant benchmark and metrics, creating improvement outcomes from the TCA results, or increasing engagement with clients or desk on TCA. We will have the results in a couple of seconds, and I'm interested in what our speakers think about the results. There they are. Maybe we can start or continue with you, Elliot, if you like.
Sure. So yeah, I mean, there's some really interesting points here. I think what's pretty interesting is a couple of things. Firstly, getting improved outcomes and actually having something that's actionable and usable is clearly clearly a major concern and the big challenge, as well as actually the data management side. And certainly, I think in some ways those two go hand in hand. And certainly we'll talk about it in a minute. But I think certainly the data management side, having a consistent set of data you can actually use to provide insight and analysis, but not just analysis that's going to go and be a tick box or a benchmark, but you can actually use to put something into real life is critical. And I think we certainly at BMLL have spoken a lot about going beyond just sort of traditional TCA into what we call execution analysis, where you're not just taking those results and putting it into a nice report, but you're actually building it, whether it's putting it into a model, so using sort of historical data as well as the sort of TCA results to feed into a model, whether that's going to influence your broker routing decision, whether that's actually going to back into your alpha and your strategies, actually taking those results, feeding it, analyzing how they've done over time, and turning that into actionable decisions. And that's something that certainly when we speak to a lot of clients, we see and certainly echoes that. And I think by having consistent access to granular data, sort of at the level 3 level, where you can actually see all messages, see all orders in a consistent environment where you can then use that to make decisions, is absolutely critical in any sort of transaction cost analysis or execution analysis.
Yeah, I would agree with this. I mean, we're going to touch upon these points a bit later in the webinar, but definitely I think we're past the stage where we just want to display the data and display the performance results, but we also want to ensure that these performance results are being used into a feedback loop for execution, either from an advice standpoint, but from an automated standpoint, which is what we're going to cover in the next sections and questions.
Maybe we can also then continue directly with you, Michael. Can you explain parameter optimization and how are they implemented to improve trading strategies and execution performance in real time?
Yeah, so hi everyone. I think first, let me tell you a bit about what we do and in which context we have actually looked at this problem. So QUOD is a provider of adaptive execution. So in adaptive, I think there's a bit of what we were discussing earlier, which is we want to get this feedback loop with the observation and advice on trading, automation on trading, and as much as possible, this being automated. We are mainly active in the equities and the FX space and in the execution side. So I'm mainly going to be talking about what we looked into to optimize the execution side of the trading. Yeah? So the first thing that we did look into is post-trade and post-trade TCA and pre-trade TCA. From a post-trade TCA standpoint, I would say that on our side, the use of machine learning here has been, and what we looked into has been a bit isolated to crunching more data. I mean, I wouldn't say that we've been looking into using some very advanced machine learning tools there, except for an example I'm going to be presenting a bit later, which is data clustering. But where we think there was a very, very important interest here was really from a pre-trade side of things. What you're trying to do is you're really trying to leverage all the data that you've been gathering, and we will talk about this a bit later, into actionable decisions or advice, and in something that is going to be based on machine learning, so that we can have an optimized decision and optimized solution here. Yeah. So we've been focusing mostly on using, I would say, big data type of tools for the post-trade side of the TCA, and using more machine learning techniques for the pre-trade side of the TCA here. Yeah. And to put it back into context, I think we need to look at how this has evolved over the past few years. Yeah. So I think let's say 5 to 10 years ago, I think if we are looking at the way we were optimizing the execution, then we had a broker ranking pretty much that was updated not very regularly. I mean, sometimes that was just updated once a quarter. And it was actually very based on the relationship you were having with a given broker or the whether you knew the guy in front of you. Sometimes, you know, it was very sometimes approaches that were not very logical. And then we've seen the introduction of what we call on our software gating rules, which is pretty much a logic by which you are trying to put some of the rules that you've been using as a trader into some Boolean logic. First, these rules were being very infrequently updated, meaning that they were not really adapting to the market condition. They were rules, but they were like very, very static, and they were not really changing. And then gradually, brokers have been updating these rules a bit more frequently, so that they could get better return. I think one of the challenges with this approach is that you are trying to get to a better performance via an analytical approach, in the sense that you still have to structure your trading decisions into rules, yeah, and being able to structure these decisions into rules introduce a lot of bias. You can have a feeling. You can observing and try to put these trading decisions into Boolean rules that are working in some market conditions, but probably not working on others. So there's a large bias that was introduced by this. So I think this is where we actually saw the benefit of using machine learning techniques here, because you are using, I would say, a more scientific and a non-analytical approach to solving this type of issues. And then you also don't introduce a bias in the decision that you are actually making, and with the ultimate goal, obviously, of bringing better performance and efficiency of the rules that you would be using.
Thank you for your input, Michael. I believe we have Elliot still in this call. Feel free to add anything if you like before I show the next poll.
Michael makes some really good points there, and I think what's really critical here is that shift to a more scientific and rigorous approach, and with that you need data. You know, it's beyond sort of what was a few years ago, where it'd be a lot of feeling and a lot of sort of sentiment. Oh, that one's probably better than this one. Now, you know, if you have that data and you can line it up, actually that's where you're going to be able to add real valuable and get output and insight. And I think the other thing which is really worth talking about is, you know, especially as people move to more advanced machine learning techniques, they tend to have more parameters. You know, you go from a few simple sort of gating logic, as was explained a minute ago, to actually a whole suite of different parameters, different features that you might want to calculate off that data. That might be something simple like saying, okay, well, what is the routing logic when you know spreads are wider or volatility is tighter? But it also might be, you know, certainly in other fields, and as we move towards more advanced machine learning techniques, you might want to include more advanced features. And certainly we've seen a lot of our clients, when they're implementing sort of execution analysis, will use features from right across the depth of the order book to actually build in that insight. So you're putting in these whole different sets of features and inputs with a wide set of parameters in your model. So you need scalability to be able to actually run that at scale, to tune and find the optimal parameters for the situation at hand. And the key thing then is, once you've got that input and you're able to produce those parameters, is actually embedding them in a real-time workflow, so you can actually use them to help that. And certainly that's where we've spent a lot of time and effort with our end clients into building in and incorporating that historical data, so you can ultimately turn that into a model which is actionable and ultimately usable in the real world.
Thanks for adding. I have the next poll I would like to show to our audience and let them answer on that one. Please make sure you select one of the following. So which of these concerns limit your adoption of advanced pre- and post-trade transaction cost analysis, or TCA? Cost, lack of proper representation, effectiveness, unintended consequences, clients questioning TCA outcomes, and lack of quality data availability. We'll give you a couple of more seconds to answer to the poll, and then we'll see again the results on this next slide. We have, now they're coming up. Okay, I see 100% at lack of proper representation of my workflow. I actually was planning to ask Michael to comment on the second poll. Maybe we can add a couple of details to that one in this round.
Yeah, I think I would probably have selected the lack of quality data availability more than the if I had the choice. I think one of the and here I think it's very uneven depending on the use cases and depending on the asset classes that you're dealing with. I think it's a trading party that is only accessing third-party algorithms is going to have a different objective than someone who's using own internal algorithm. And also, there is a big gap in the different asset classes. So if you compare, for example, equities with FX, for example, on FX we're talking, I mean, especially if we're talking spots, we are talking about a handful of instruments, but where the data is mainly private. So that means getting the data, I mean, you pretty much get the data that you manage and the data that you get, but sometimes that data does not really represents the whole market, if you want. If you're looking at equities, on the equity side, then the data is widely available. And sanitized. I mean, with companies like Refinitiv, for example, where we would be sanitizing and getting some very clean data into this. But the challenge here is that you can't really be running a very heavy-duty exercise and number crunching machine learning on the worldwide equities if you wanted to. So I think so every asset class and every use case actually brings its own challenges, but machine learning has some is actually providing some of the good tools to actually cover that. So for example, if you're looking at the equity space, on the equity space, I think one of the first things that we did was actually that trying to cluster the data and cluster the equities data into a set where you can actually pick one of the instruments inside that set of data and actually work your machine learning, your learning exercise based not on the total majority of data, but just on a selected instrument inside this data. And this is how we are tending to, and this is something that machine learning, obviously with all the various clustering learning, can actually help you do before actually going into optimizing the execution by itself. We also need to compare the various use cases. It is we were talking about parameter optimization. So there's two parts. There's the rule optimization, which is I'm actually going to be using another broker algorithm, for example. Which one should I be picking to actually get a good performance and to actually get to the results that I want? Most of the time, the challenge here is that if you only rely on your own data, you don't have that much data that you can crunch into your machine learning models, because how often have you used the Goldman Sachs VWAP, for example, or how often have you used a third-party algorithm? The situation is slightly changing when you're dealing with your own algorithms and you want to optimize the parameter of your own algorithm, because here you have the capability to generate data by yourself by running some proper backtesting. So I would say the most important part for me of the machine learning exercise, and definitely if you're talking about the learning side of the exercise, is really to get enough and good quality data here.
Thank you so much for
I'd echo exactly those points.
Yes, please.
Sorry, I'd echo those points a lot. I think what's been said there. I think having good quality data is fundamental, certainly as you get into more advanced techniques, because it's as simple as what you put in will dictate what you point out. A machine is only going to learn on data that's as good quality as it's given. If you give it noisy, inconsistent, unclean data, you can't expect a machine learning model to come up with anything other than a model which is noisy, unclean, and inaccurate. And that's certainly something that I echo there. I think on the scalability, there was a really interesting point that Mikko came up with about the equity side and how you can't just scale it out. I think one of the things certainly we've done and we've built into a lot of our products is that scalability, to be able to scale out and run large scale back testing and analysis over multiple years of data across multiple asset classes, and certainly in the equity space, that's exactly what a lot of our customers do of the product suite that we have. But again, the foundation of having that scalability, it's no point having a great scalable machine learning platform that can do advanced TCA and execution analysis if your actual underlying data isn't good and isn't clean and doesn't have all the features and all the data points. So if you're only looking at a level 1 or a level 2 data set, how do you know really if actually that venue, if orders get filled as often, and actually, or if actually how long you've been there, been resting on that particular venue is normal compared to other trades and other orders. So I think that access to good, granular, holistic data is absolutely essential, especially when you get into these more advanced techniques.
There are some one thing here. I think even sometimes when the data is lacking, I mean there are some machine learning techniques where you can emphasize some part of the data. I think this is what is used, for example, in fraud detection. I mean, in fraud detection, obviously the most important data that you have is when you have a fraud. If you go for a supervised learning exercise, for example, but obviously they're not only happening very often. So I think your intention when you are actually feeding your model with the data is to be inflating the number of occurrences of this type of the data, so that you don't disturb the model and you don't trick the model. It may be that, I mean, if you compare it to finance, I mean, it may be that order and this single order, which is the most important order of the day for you, that you're going to have to deal with. But that's probably something that's probably the type of order and in the given market condition that you may have not seen too often in the past. So you may want to, over time, to be emphasizing this type of data in your learning pack, so that you can actually ensure that your model is going to take a proper decision in this type of situation.
Yes, true. Thanks for adding to that. I mean, we're seeing the slide now here. I'm not quite sure, Michael, can you see that as well? Maybe we can add a couple of details for our audience to that one.
Yeah, so that's been an equity clustering exercise. Quite simple in that case. We took a couple of very easily available features, size of spread, volume that was traded, and we did do a basic clustering exercise. And if you go to the next slide where we actually see the clusters, then you can see that there are some, I would say, natural clusters that are being highlighted here. And if you let me actually broadcast that one. There we go.
Now
and if you're looking into this one, I mean, this is the type of clusters that we would use down the line. So we would be cherry picking some of the instruments inside these clusters and run the learning models onto these, so that we would be easing the work and the learning that our algos would have to do here. And this data is actually publicly available data. As I was saying, on the equity side, there's a lot of data which is widely available. You can also generate your own data. I mean, I was saying if you're using your own algorithm, then you can really backtest against something which resembles a production environment, and then you would be able to generate your own data. Which is leading us into the parameter optimization side of things. I think one of the challenges when you're using your own algorithm is not necessarily the selection of the algo that you want to use, but what is the set of parameters that you would want to use for a given algorithm in a given market condition to get to a given outcome. And I think this is one of the things that we are trying to solve with parameter optimization on our side.
Thank you for clarifying that a little bit more and further. I have another question for the both of you. How can trading desks implement successful multi-asset TCA program to improve performance and pre and post trade insights? Maybe we move over to Elliot again.
Sure. No, it's a really good question. I think really it comes back to the theme that I think we've been talking about for the last 10 or 15 minutes. It's data at the end of the day. If you've got consistent data across different asset classes that is easy to use, is accessible, is clean, but it can actually provide you insight. And if you've got a scalable way to analyze that, to build into some of the great examples that we've just seen in terms of whether it's clustering analysis, whether you're running regressions, whether you're doing even to the simple visuals just to understand that data to build into actionable events. If you've got those components, that's how you're going to be able to get that value out. And I think one of the things that we spent a long time at BMLL, and one of our real value adds is in harmonizing data and making it consistent, not just over different venues, but over different asset classes. So whether that's on ETFs, whether that's in equities, whether that's in futures, the data is consistent. And that means the program and the analysis you run on equities, you don't need to suddenly reinvent the wheel when you're going to futures or to ETFs. You can just use the same if you're doing it in a Python environment, or if you're running visual tools or different applications, you can use the same thing consistently. So you don't have to spend time and effort, munging, putting that data into a format that works. It's already there for you. And I think that is the most critical thing for getting any sort of insight in a TCA perspective. And the other point is actually making that actionable. And I think that's the other real theme that's come out of this is it's all well and good having a nice report, but if you can't have a program to say, schedule things to run on a daily basis, actually turn that into something which can go and feed into your production systems, whether that's a daily report, whether that's a weekly update. If you do that, you're going to be in a position where you can take these actionable insights. And going back to that earlier poll question, that was one of the critical things for everyone. How do you actually get it into workflow and actually get outcomes from it, not just a nice report. And I think having integration into real systems is the critical way. But the fundamental point, if you've got clean, consistent, harmonized, granular data that's as granular as you can possibly get, that is going to be the foundation of any good program.
So it all comes back or down to structured data and the quality of data, obviously.
Yes.
Yeah.
Michael, we had a discussion with a couple of other colleagues before about a couple of algos and examples that you mentioned. Maybe you can also let our audience have a little taste of that, I would say.
Yeah, we've been, I mean, talking about some of the I mean, just before I jump into this, before to finish on the workflow side of things, I think there's a couple of challenges that that you need to address. I think one of them is latency response time of the models. I think this is very good to have loads of data, and it doesn't. I mean, it doesn't really matter as much how long it takes to teach the model, but you also want models that can reply in a timely fashion. I think if you're looking at an advice for a given trader, probably looking at a model coming back in a couple of seconds, and will be acceptable. But if you are thinking about introducing that into a very reactive algo, I mean, a smart order router, for example, would be a perfect example of that. Then you probably need to shrink that latency figures into the very low hundreds of microsecond or millisecond numbers. Yeah. So that's you also have to keep that in mind. I mean, it is also important that the response time of the model is in line with your expectation and is in line with your use case. You can't wait for a couple of minutes for some of the use cases. It's just not possible. So I think this is one of the challenges that you have to consider. And I think another challenge that inside the workflow, which is starting to appear, is in terms of regulation as well. It's just like, how do you explain the decision that has been taken by a model sometime? And I think this is and I think I mean, that could be the topic of a whole other webinar, I guess. But I think the regulation is actually a key area in this as well, which is how do you explain the decisions that have been taken? How you do ensure that the decisions are taken in a consistent manner? I mean, all the rules that were introduced around algos around MiFID II, for example, you would have to put them back in context of the machine learning models that you're actually using here.
True. And do you want to add regarding the examples? Do we have anything else? Yeah.
Yeah. So as examples on our side, I mean, we've been investigating on a few things. I mean, we've been investigating some machine learning models on price prediction, so short-term price prediction, especially for everything related to pegging algorithms. So pretty much, I think historically our pegging algorithm were you had to feed them with offsets and reference prices, and I think this is something that we didn't want to do anymore. We actually wanted the model to adapt to the current market conditions. So for that, we needed some a very short-term price prediction, so we would be able to do this, and that's one of the areas we introduced machine learning. Also, we are at the beginning of the journey on some of the parameter optimization around our benchmark algos as well. It's just like most of our clients are coming back to us and saying, well, as much as I love the fact that the algo is actually taking like between 30 and 40 parameters, I mean, I don't know what's the right set in this market condition to get to my outcome. And I think this is really something where we are introducing machine learning to actually advise or immediately select the proper set of parameters that you want to use to reach the outcome that you're trying to reach here.
Thank you so much for giving us a bit more insights from your part. If you don't want to add something else, I would move to the next poll, but I don't want to, take anything away from our audience.
I agree with what's been said so far. I think explainability is a key driver of anything here. And I think that we'll see a big shift towards that in the next 5 to 10 years, in the same way that we've seen a big shift towards explainable AI and machine learning in general. And I think that's exactly the sort of changes that will happen. And I think I just sort of reinforce my earlier point, really, building out all of these things requires good data. And I think once you've got that as the foundation, you can add in, this different tuning parameters, you can build in your clever models. And I think that is that foundation, and building on top of with explainable sort of good parameter tuning that are right for the right conditions, then you've got a really good system in place.
Thank you. Then I'll move to the next question, the next poll that we have. You will see it now on the screen. What is the most important driver to adopt a more advanced TCA solution? Increasing cost pressures, better trading outcomes, improving or benchmarking, workflow automation, and regulation compliance. Most important driver to adopt a more advanced TCA solution. Let's see what our audience thinks in a couple of seconds. After that poll, we will also be moving forward to a couple of questions from the audience. Let's see what we have here first. So it's again a 100% answer, workflow automation. Michael and Elliot, feel free to let us know what you think about the answers or the answer that we have right now and what you would have chosen probably.
Yeah, I think it reinforces what we've been discussing, which is that I think showing nice reports and statistics is probably not enough now, and we really want to get more out of it, and we really want to make these statistics into actions and to actually facilitate and have better performance out of your trading.
I think that is really a really good summary of it. I think if you can automate things, if you can get good input, build it into a nice automated workflow, then that's going to give you a good solution and a good advanced execution analysis and TCA solution that's actually going to be actionable and you're actually going to be able to do something with. And I'll say it one more time, it all comes down to the inputs that you can build and you can start with. Because if you can do that and you can combine that with automation, you're going to be able to actually incorporate advanced analytics into TCA and execution analysis.
Thank you very much for your input. We had a couple of questions from the audience that we will answer later on. We are coming to an end of this session. So thank you very much for all of your insights, for answering our questions and attending this webinar. Hopefully we will have these kind of discussions soon again. So thanks, Elliot, and thanks, Michael. Also, thank you to our partners and speakers for today's session, and thank you to our audience for participating in the polls. We hope you found it an interesting session. And as I said also in the start, we value your feedback, so please do complete the pop-up survey. In particular, we would like to know if you would be interested also in joining a demonstration session where we will be showing how to integrate TCA in your data workflow. So this is another possibility that we have. Hoping to see you soon and have a great evening.